over next to our next panel. This is going to be a really great conversation. We're talking investment from idea stage through to scale and exit. And so I'm going to hand straight over to our next panel moderator. Sule is from the London Stock Exchange in the Africa team, and she's going to be hosting our panel and introducing our fantastic guests. So over to you.
Thank you, Anthony. Good morning, everyone. It's a pleasure to be here. My name is Opedimeji, and I'm the Business Development Manager for Africa at London Stock Exchange. So my role involves engaging with African companies and their shareholders to explore listing in London, which is one of the interesting ways for founders and shareholders to extract value for their investment. So to the topic of today, when you talk about the UK and Nigeria tech ecosystems, it's hard not to talk about its fintech success stories. In Nigeria, fintech had a good year. Nigeria's Paystack was acquired by Stripe for $200 million, and Nigeria Challenger Bank Kuda raised $10 million, led by Target Global, in Africa's largest seed round thus far. It may seem obvious now to the success of these industry-leading businesses, but how does an investor at the earliest and most risky stage identify the opportunity? Today, we sit down with two VC investors, Target Global from the UK and Ventures Platform in Nigeria, to explore the UK-Nigeria investing landscape and to ask them exactly that, and where they're looking at for the next wave of investment opportunities in Nigeria. So I'm going to hand over to Kola and Ricardo to introduce themselves. We can start with you, Ricardo.
Hey everyone. Yeah, first of all, thanks for having me. Real privilege to join in this session. So I'm Ricardo. I'm a partner at Target Global. We are a pan-European kind of venture fund where we invest typically out of two sub-funds, early stage and growth. We're sector agnostic. We do a bunch in fintech, across different stages and different models. Based in London, we're headquartered in Berlin, but we increasingly invest also outside of Europe, and Kuda was one of those investments. Happy to dive into more detail in a bit.
And I guess that's my cue to go. Hi everyone, my name is Kola Aina, General Partner at Ventures Platform Fund. We are an early stage discovery fund for Africa. We invest across the continent at the earliest stage of development of the companies we back. We've been backing companies for about 5 years now. And I consider it a great privilege every time we get an opportunity to partner with a company at the earliest stage and work with them through scale. We recently exited our early investment in Paystack, and there's a number of interesting companies on our portfolio that I'll be happy to spotlight today as well. I also invest as an angel across the world. I'm increasingly looking at opportunities in the UK, in the US as well. But the Ventures Platform thesis is focused on backing companies in Africa and other emerging markets. And I'm delighted to be here to share some of our experiences. Thanks for having me.
Thank you very much, Kola and Ricardo. And to the first question, Kola, when back in the likes of a Paystack, a 200 million exit as a first check investor, is a pretty good outcome. And Ricardo, you invested in Revolut as an angel investor in 2016. And since then, they have gone on to raise around $836 million at a 5.5 billion valuation. So a question to both of you is, when writing the first check, what is it that you're actually envisioning and looking for a successful outcome for you and your investors? We can start with Ricardo.
Yeah, sure. So maybe to differentiate here a little bit between kind of investing as an angel versus institutional fund. If you invest as an institutional fund, really you're optimizing for ownership, and every single investment should have the potential to return the fund. And so depending on obviously the fund size, you're really looking at kind of big outcomes, $1 billion plus type businesses that, if you still hold whatever 10% or so at the exit, it will have the potential to kind of generate a return for your investors. As an angel, it's slightly different because you have more flexibility at what stage you invest, to do secondary, kind of even a small ticket can obviously generate a really nice return. So slightly different perspectives, maybe just to kind of add that up front. Really, but what I think the similarity for kind of at the early stage for both, if you invest as an angel or as a fund, is really you try to back good teams, and because everything's so unclear that really you're betting on a founding team kind of executing as good as possible. I think as an institutional fund, and back to the first point in terms of kind of big outcomes, you're really looking at kind of good teams tackling a big market. So you have the potential obviously to build big businesses. And with that comes kind of visionary founders that are thinking really big, right? So how to build not just $1 billion business, but how do you build a kind of $100 billion business? And it sounds crazy. In the past, it sounded crazy when you had but you see more and more companies that are really kind of actually reaching those goals. I think there's a lot of potential if you just look at kind of the way the world is moving and digitizing. And what sounded crazy a couple of years back, particularly kind of in Europe and probably also in Africa, more and more is becoming true. And I think that's really exciting. As a side note, Kola, please, I've been talking a lot.
No, Ricardo, I totally agree. But I think one of the things I consider the most fortunate about how we invest is like sort of sit in that sweet spot in the middle of a classic institutional fund and an angel fund. So Ventures platform is able to act like from an angel's perspective, even though we are looking for classic VC returns, because we tend to write small check sizes for our first check. An average check size of 100,000, and so we're able to sort of really focus a lot more on the quality of the founding team, and what we've seen is we have at least there's about 2 or 3 companies in the portfolio today that started off with one business and have completely pivoted. We invested in a company that was building world-class digital tools for digital marketers, for instance, right? Today, they've pivoted completely to a pharmaceutical play, right? And we've seen our shareholding get transferred to this new business that is really doing really well and scaling. And that's what happens when you back the founding team as opposed to necessarily backing the business, because at the stage that we come in, a lot is still being formed. And so what we're looking for is some evidence that this is the right founding team to go after this problem. And obviously we often we always try to extrapolate the scale that is possible in this space. And so very often we even where we find an outstanding founding team, if the market doesn't appear scalable, then we don't consider it venture backable. As a rule of thumb, I am drawn to companies and products that can be considered painkillers and not necessarily vitamins. Again, maybe because of the part of the world I come from, there's so much need, there's so many gaps. And so even when I'm backing a company in the US or the UK, I still wear that lens. So I would struggle to back a dating app, for instance. I think dating is a significant problem. I've been married over 10 years now, but I remember what dating was like. But it's just not my thing, right? I see Ricardo laughing at me there. It's just not my thing. You have to be solving a critical problem. For me, I define that as companies that are tackling non-consumption. So going back to Shola 5 years ago, when I met Shola, my enterprise software company had a hard time trying to integrate businesses to online payments. And so I understood the problem very clearly. I knew that there was unmet demand, and it just made sense for me, right? There was a huge non-consumption of digital payments in the space. And that for me was really, what made the decision a lot easier at that time.
Thank you, Ricardo, Kola. It seems a general theme from both of you is the quality of the founding team. I think that that is very important, as well as the ability to scale, like Ricardo said, to scale to even not just $1 billion business, but even a $10 billion business, or $100 billion business, which is important for returns. And for entrepreneurs on the call looking to, go into the dating scene, I guess you now know you don't have Cola's backing on that. So Ricardo, as a partner at Target Global, you led the investment into Nigerian fintech Kuda, which was the largest fintech seed round in Africa thus far. And this was your first deal in Africa. So what has drawn you and the fund to Nigeria? And what excites you about Africa and the opportunities in Nigeria?
Yeah, great question. How much time do we have? This could take a bit longer. Look, I think there's a couple of things that coming together. I mean, one is obviously, population size and growth is a very important point here, and you'll know this better. But kind of 400 million is the number that is always in the back of my head, and in 30 years or so, I mean, that's bigger than the US, and that's just kind of already in terms of market size, that's almost unparalleled. I think that's also very attractive. The second is, there's a real kind of mobile affinity and a very young population that's increasingly tech savvy, as a customer base. Then you have structurally, it's interesting, particularly in fintech or on the consumer end. You have a lot of kind of brick and mortar banks that are not necessarily kind of focusing on the end consumer, but maybe more kind of put more emphasis on commercial banking or other parts of kind of banking operation. So, you have high fees and not necessarily always the happiest customer base was at least the kind of the feedback I got with the traditional banks. So really what that creates is a huge opportunity for a new generation of banks and digital bank that puts the customer first and just builds a product that people really like and makes banking, which is one of the most important, kind of dealing with your finances is a really important part of of your life, and this should be done with a kind of consumer friendly product or company and not something you really dread and it costs you a lot of money and you get a bad customer experience. So, we just saw a lot of potential here. And then again, paired with a good founding team, a visionary founding team that also thinks product first, because at the end of the day, the customer is what matters. And you should grow through product and not by spending, a lot of money on Google or Facebook, but actually you grow because customers truly love your product. And I think finding a team that understands that is really, really exciting. And, the early traction we saw with Kuda was very, very fascinating. And then, I mean, there's obviously, you can draw some parallels, in this specific case with Nubank over in Brazil. Also, obviously, some experience with the neobanks in Europe help to kind of understand the business model, because ultimately also as an investor, you want to invest in companies where you feel you really understand the business model and you can possibly also add value along the way. And this was just a combination of those different things. And since investment, I mean, we've been really, really happy to Kuda's doing a phenomenal job and developing the product further, growing very nicely. And I think there's a lot more to come. So we remain very, very excited. Hope that answers part of the question or some of the question. Yeah.
Yeah, thank you very much, Ricardo, for keeping that very sweet and concise. Kola, I mean, you recently invested in, you mentioned that you're basically you're looking at investment opportunities in Europe and even in the US. And you recently invested in a UK-based property management platform, Kola. So what has you looking outside of Africa? So Ricardo is looking into Africa, you're looking out of Africa, and what inspired that?
Great. First off, Ricardo, kudos on Kuda Bank. Spoke to the founding team super early and kind of bummed that we passed on that one. But I think you've got a winner on your hands there. So glad you backed them. Yeah, thanks. I guess if I had to dissect it, there are three reasons why I backed Klooper. So first off is as an investor, and I think this is useful for everybody. One of the key pillars of building wealth or your portfolio is really diversification, right? And I have a very Africa-centric portfolio, and so over the years I've been looking to sort of create, dilute a bit of political and geographic risk, and really just looking at other markets. So backed two U.S. companies last year, and did Klooper. So besides that, if you meet Tokes, the founder of Klooper, I mean, you're immediately struck by his conviction, his experience, and just his understanding of the challenges in this space. And perhaps because I had also, I had dealt as a landlord, in the UK. I mean, I had a very hands-on understanding of how difficult it is dealing with tradesmen and tenants and all of that. So for me, it's a painkiller and not a vitamin, a critical pain point. Really love, the progress the team has made already, and how they are going about it. And I guess the final thing is, when I look at global companies, I'm always keen to identify companies that have the potential to scale to the African market, right? And this was clearly a part of Klooper's plan. Tokes, the founder, is of Nigerian descent. Not like that's a must-have criteria, but that certainly helped quicken the decision-making process. We're super excited for what they're doing. It's a one-week-old investment, so I can't say too much yet, but fingers crossed we have a winner. Thank you.
Thank you, Kola. And I like the line around, looking at companies that provide painkillers as against vitamins. I think that's quite interesting. And a question for both of you. What similarities and differences have you found from backing businesses in Nigeria and the UK? And we can start with Ricardo.
I mean, look, at the end of the day, you're backing ambitious people that are willing to, make a huge jump. I mean, kind of starting a company takes a lot of courage and takes a lot of endurance, and I think that's whoever is willing to quit their job or take that risk and starting a company with so much uncertainty around it, requires a lot of respect, and I think all over the world. So I wouldn't just boil it down to UK and Nigeria, but whoever does, I think it takes it's a huge leap of faith, and you just always I'm always fascinated with the kind of enthusiasm and the drive and the and the kind of vision of founders who do that, and that's what I think is similar. But really, whoever really does that first jump, particularly in the very, very early phase where you don't have the capital and you don't have the kind of fame, and you work these long hours to really get to that next stage without any kind of financial certainty. I mean, that's what's similar in my mind. Then there's obviously things that are not similar, which is, I think it's probably a lot easier in the UK or so to raise your first couple of $100K, and it's probably also easier to find, very good kind of first set of hires, and I think and this gap is changing, and that's good, and that's what's really exciting. Kola, you'll probably have a better view around that, but I think it's probably because you have more institutional capital, I'd say, in the UK vis-a-vis Nigeria. It's probably easier to have that, to go through that, first couple of months or years and probably along the whole journey of the company in the UK vis-a-vis Nigeria, which makes it even harder and takes even more, requires even more respect for anyone that, starts a business tomorrow and out of Africa. So that's just my 2 cents. Kola, you probably have a better view on that because you've done more investments in both regions.
Yeah. So, I actually think there's more dissimilar factors than there are similarities, to be very honest. I mean, the markets couldn't be more different. Take it from the angel side. I mean, you've got schemes here that support early stage investments. We are struggling to get some of those schemes passed in Nigeria. And I think you can't undermine Ricardo can probably speak to this as well. You can't undermine the power of the various tax incentives to power early stage investments in the UK. The size of the market is significantly larger, I think, by a factor of probably 10x, just looking at the startup ecosystem, or probably even 20x from my last analyses. But also, I think there's a missed opportunity here, and this is sort of the opportunity that as I spend more time in the UK and look at more companies here, I think UK startups have a natural advantage in terms of expansion to the African region that has unfortunately, in my view, been underutilized. I mean, you already have a large preponderance of diasporan Africans, Nigerians, and East Africans in the UK. So that sort of creates a natural sort of social marketing stream, if you may. You also have the proximity. You've got time zone advantages and the like. I mean, we invested in a company called VertoFX. Founders are actually the company is based in the UK, registered in the UK, but the company facilitates FX flows for businesses, right? And they've been able to utilize the UK as a pivot to sort of serve the continent. And so I think that there's an unlocked opportunity in companies based in the UK looking at the African region and vice versa as well. Be it remittance or what have you. And so I'm really keen to talk to entrepreneurs who are looking to build from the UK for Africa or from Africa to serve the diaspora market in the UK and Europe at large.
Maybe, Kola, can I ask you a question on this? Because I think remittance is a very specific case here, right? Where you serve a corridor and it makes sense to kind of be present in both countries. But in my kind of humble experience, it's very difficult to build a product, particularly probably for a country like Nigeria when you're not local. Really understanding the customer, really understanding, all the kind of intrinsic drivers of, the market makes it very, very hard unless you are local, right? If you kind of speak to customer every day, etc. I mean, what's your experience here? I mean, have you ever seen any company that's done a good job in kind of building particular consumer business whilst not sitting in Nigeria?
Yeah, look, Ricardo, that's the classic assumption, right? That we all have as allocators of capital, particularly at the early stage. We want to deploy capital locally. You want entrepreneurs to be local. But if you look at what the likes of Bolt, I mean, I like Bolt as an example, and not Uber. If you look at what the likes of Bolt have done, I think there's something to say for their ability to set up local teams that are indigenous and that can localize a product to a large extent. Obviously, this isn't the classic path to scaling across countries, but I think there is an untapped advantage in the fact that you have such a large diaspora in the UK, for instance, for a number of these large markets in Africa. Obviously, it might limit the kinds of products or the kinds of verticals, but I think there's an opportunity here that needs to be explored by more entrepreneurs because the advantages are just so many. Time zone, again, language, proximity, but you're absolutely right. I mean, there's certain localizations that are required, that I think are possible to achieve. And I use the example of Bolt again. Not every company can be a Bolt. Bolt has taken a really, I don't know the right word to use, but a really gangster approach, if I could use that word, to expansion in the region. So yeah.
Interesting.
Yeah. Thank you very much, Kola and Ricardo. So, I mean, because of time, we're only going to be able to take one question from the audience. And there's an interesting question here. And that's for Kola actually, backing a painkiller and not vitamins in Africa, in an African context, may mean more of atoms than bits. And the question is, why early stage investors, why do they see asset-based startups as non-scalable or difficult to scale and so not venture investable? Kola, you're on mute.
Yeah, that's a really good question. I think it comes down to capital efficiency, right? The whole notion of startups, particularly in a market where you don't have the guarantee of a conveyor belt of capital, right? I mean, we've dealt with this, right? We backed a fantastic company by a fantastic founder called from Cameroon called Viva, who they were looking to build offline content distribution boxes, you know, that you would put in marketplaces, buses and the like. And you know, great product, you know, clearly a pain point for content consumption, but they just couldn't find the right quantums and velocity of follow-on capital. And you know, essentially burnt out of runway. And so I think the real issue is once the company has hardware devices or is heavy on assets, it becomes really difficult to scale in an environment where you know you don't have enough supply of capital. And so capital efficiency tends to be what we're focused on when we look at companies. I hope that sort of helps as well. I mean, someone has to do it. I mean, I spoke to a hardware company 2 days ago and I'm like, man, I wish I could back this company, you know, because you need it, right? It's the hard stuff. But we haven't quite figured that out yet, you know, yeah.
Yeah, thank you so much, Kola and Ricardo. We have so many questions from the audience, but because of time, we're not able to take everything. And I mean, it would be useful to know how people can reach out to you both. Ricardo?
Twitter, LinkedIn, email. I'm happy to put it in the chat. Is that a good way? Yeah.
Yes.
I just put mine in the chat. So Twitter is great, a great way to connect.
Okay. All right. Thank you so much, Kola and Ricardo. Really enjoyed the conversations. And now I'm just going to hand over to Anthony.